Good afternoon and welcome to this weekly market update presented by myself, Wichard and Andre Cilliers. Andre, we had the Reserve Bank last week come out, left interest rates unchanged, but there was a few snippets by our governor, Lesetja Kganyago. Do you want to comment on what he said on his hawkish pause?
Yes, we had left interest rates unchanged, and that was no surprise. But the surprises always comes in not with a decision, because that's what everybody expects, but with what they say. And this time around, he really expressed his concerns about the possibility of inflation, specifically food inflation, that could go higher and push the inflation rate even to higher levels than what we have seen over the last 2-3 months, where we had seen that there was a change upwardly. And the reasons for that, mainly because of a drought situation and heat waves, where maize crops, soya crops, etc., are all under immense pressure, and we had seen maize prices and those prices increasing significantly over the last couple of weeks because of the estimate crops being lower. There's even the possibility that if the crops gets revised lower continuously, that we might even have to import a little bit. And apart from that, we've also seen fuel prices on the increase, and of course that also has a negative impact on the inflation rate. And then one must not forget, and that he also mentioned, that administered prices like electricity, remember that the Eskom increased prices kicked in now at the beginning of April, and in July it kicks in for other consumers. But direct users of Eskom power receive their increases now on the 1st of April. That could have a negative impact. And then, as I say, in July, a lot of other administered prices also comes in from municipalities and Eskom for consumers. So Mr. Kganyago had concerns about that.
So yeah, that just fits in with the whole rhetoric across the world we've been listening to, especially from the Federal Reserve, about interest rates staying higher for longer, not looking to cut, and the market was prematurely pricing 7 cuts for the US in the end of last year, and that subsequently the pricing in less than 50% chance for even a cut now in June. So it just fits in with the higher for longer rhetoric. So while we were on having Good Friday, the US released their PCE deflator indicator, the measurement mostly used by the Fed to measure inflation. It came in at 2.9%, which was in line with expectations, but it is still on the rise. Andre, your views on inflation? We've spoken about it a few times, but what your views on the inflation out of the US that we?
Yes, we've spoken about it before, and if we look at that, then we've mentioned we've spoken about shipping, we've spoken about oil prices, we've spoken about the manufacturing, and that's also a figure that came out over the weekend whilst we were relaxing. That manufacturing in the US jumped to the measure there to above 50, so that's positive territory, positive growth. That's because of the spending in the military, but we've spoken about that. But all these things create demand. It puts pressure on prices. It creates positions, be it short-term positions. The job sector still looks good. That simply means if you're employing, there could still be pressure on the wage increases, etc., because of the shortage of labor. And all of that adds to inflation and adds to strengthening the hands of a US federal president saying interest rates will remain at higher levels for longer. So these things are all in line with discussions that we've had previously on our weekly videos and communications with clients. and as I say, the rhetoric will just continue, and as that continue, and I think I mentioned that last week, that there could then even be further concerns that interest rates might not even decline in June as expected by a lot of people and by the market, and it might even be pushed a little bit forward. So the pressure remains now on the upward side rather than on the downward side. But for now, I would stick to my guns and say June is the area where we start seeing lowering.
Yeah, so that all filtered into the dollar being on the front foot, trading at 4.5-month highs, the dollar index above 105. But there's a little bit of a caveat there. The yen is under pressure. We've seen the euro become under pressure now. The sterling's under pressure. And actually the rand is sort of just hovered here between 1880 and 1890. Still within our band that we've spoken about. But we've seen our crosses, the Aussie rand, euro rand, all those crosses come back a little bit. Does that bode positive for our local currency? That the dollar is at a 4.5-month high, but the rand still below 19.
Yes, the rand. I think that little graph of us that we've had previously, where the rand's happy in a narrow band, it's going to be with us for a while. The euro is in a band, that's happy. The currencies are happy at the moment. The world is waiting for something to happen that's not happening. And they're just analyzing the same things over and over and over without anything changing. And I think the rand this morning is getting a little bit of a benefit because whilst we also were having Easter, we had seen a gold price rising significantly, but that's also just sort of two things there saying to us that we expect interest rates to decline in the second half, and maybe we should start moving into gold as yields come lower in interest rate in the money markets and capital markets. But at the same time, the higher gold price would also give us a bit of a benefit in a safe haven because of the whole situation in the Middle East. But this morning, as we are a commodity-based country, we are exporting. We still do have a little bit of gold, and I think that's where the rand gets a little bit of a benefit this morning. But happy in the range, not about to break out of it, and no news that we can share this morning that will put it into negative territory to break out of that range. So much more we cannot really say today.
Andre, I say thank you for the update on the markets. We look forward to the rest of the week, and we look forward to speaking to everyone again next week. Enjoy the rest of the week.
Thank you.